Welcome back to the Digital Asset Report. Bitcoin rose over 3% on Thursday, reaching 111,000 in the first half of the day, with other digital assets following it higher. Ethereum is back over 4,100, and Solana and Dogecoin also gained as traders positioned ahead of Friday's key U.S. inflation report. After a week of choppy trading, investors are watching whether a softer CPI reading could extend the market's recovery. Bitcoin briefly spiked to 114,000 earlier this week before easing lower. In macro news, America's national debt has crossed $38 trillion for the first time in history. That comes just 2 months after hitting $37 trillion. The Treasury Department's latest figures show borrowing accelerating faster than ever, driven by higher interest costs and entitlement spending. Michael Peterson of the Peterson Foundation called it a troubling sign during a government shutdown, warning that interest payments alone could reach over $14 trillion over the next decade. On the policy front, crypto executives are back on Capitol Hill trying to rescue the landmark market structure bill. Leaders from Chainlink, Solana, and others met with senators from both parties this week to restart stalled negotiations. Senators Cynthia Lummis, Tim Scott, Mark Warner, and Kristen Gillibrand led the talks, with Democrats pushing for joint authorship and Republicans aiming to advance the bill before Thanksgiving. Tensions over a leaked DeFi proposal appear to be cooling, and both sides say a bipartisan path forward is still possible. Meanwhile, the Federal Reserve is taking the digital money debate mainstream. The Fed's Payments Innovation Conference held this week in Washington brought together central bankers, policymakers, and crypto leaders to discuss how blockchain, stablecoins, and tokenized finance fit into the future of money. One of the key moments came from Federal Reserve Governor Christopher Waller, who underscored just how far crypto has come in the eyes of a central bank. Take a listen.
This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies.
And turning to markets, JPMorgan says Bitcoin miners have officially decoupled from Bitcoin's price. The bank's latest report finds that mining firms' market caps have climbed sharply since July, even as Bitcoin traded sideways, thanks in part to their pivot toward artificial intelligence infrastructure. The shift is giving miners steadier, higher margin revenues. And in corporate news, FalconX is expanding its institutional footprint by acquiring 21 Shares, one of the largest managers of digital asset exchange-traded products. The deal combines FalconX's prime brokerage infrastructure with 21 Shares' ETP expertise to create new derivatives and structured crypto funds. It's the latest in a wave of crypto mergers that's seen Coinbase buy Deribit and Kraken scoop up both Small Exchange and NinjaTrader. Meanwhile, prediction market platform Polymark is reportedly seeking new funding at a valuation between $12 and $15 billion. That's up more than tenfold since June, when it raised $200 million, led by Peter Thiel's founder fund. The platform, known for hosting over $8 billion in election wagers, recently signed a multi-year licensing deal with the NHL, making it the first major sports league to allow its trademarks in prediction markets. And finally, as regulation heats up and Wall Street firms expand their crypto offerings, digital assets continue to move closer to the center of the global financial system. That's all for today. If you enjoyed this video, be sure to give us a like and follow along for more.